You always want to surround yourself with people who are smarter than you. And
That's
there's
right.
two ways to do that. In your 20s, you want a quick hit. You want to get it and move on. You're smarter than me. So, why do you need this advice from this old guy? Nothing works today like it worked 10, 20 years ago. Why would I listen to you?
Most opportunities don't come with big salaries. They come with equity.
And talking about the toys, yeah, I always laugh. I go, you're really, really, really rich when you've got a yacht, a horse, and a private jet.
Young kids coming out or going into college, getting a student loan and then when they get out, that debt really limits their professional options.
Most board certified real estate lawyers I know are scraping by.
Opportunity is constant, but you can't take advantage of it if you're in debt. We always kind of start this conversation with the same. If you could go back and give your younger self financial advice, what would it be? Welcome to today's PlanAssist Podcast, where we try to help people make better financial decisions using three core principles: have a plan, be diversified, and seek counsel. And those of you who watch this podcast regularly know that's really kind of what we build this podcast around. So we'll interview interesting people who are experts in a field or have been successful, and we start the conversation off with the same question every time. If you could go back and give your younger self financial advice, what would it be? And then we get into the conversation of what their expertise is. Today, I am super excited to welcome Joe Seagle. He has his own podcast. He's founder of Aspire Legal Solutions, where they help real estate investors, business owners, and private lenders build, protect, and grow confidently. Joe is an attorney licensed in Florida, North Carolina, South Carolina, and Washington, D.C. And after earning his law degree from North Carolina Central University, he built his career helping real estate investors and developers with a real high focus on kind of that small business owner and how do you help them grow assets. His business is based downtown Orlando. So I'm out in Winter Garden, so we're only about 10, 15 miles apart. And Joe leads a team, Aspire Legal Services, focused on real estate and estate planning, as I said. And then he also is the founder of a company called mylandtrustee.com, which we'll have a conversation around. So with that, did I miss anything, Joe, or did you want to add anything to that?
No, that sounds good for where I currently am.
Cool. That's awesome. So like I said, we always kind of start this conversation with the same. If you could go back and give your younger self financial advice, what would it be?
For me, it would be start saving for retirement earlier than I did. My first firm I worked for, I started in 1996, and I'll never forget. It was a small firm in Newton, North Carolina, right outside of Hickory, which is outside of Charlotte by about an hour, about 45 minutes today. They've improved the road system. But I remember I started at 25,000 a year. I had $55,000 worth of student loan debt in 1996. I don't know what that equates to in today's dollars, probably about $150,000 in today's dollars, or somewhere thereabouts. And they had a retirement plan. They had a 401k plan, I believe. And I didn't have any money to put aside for that. I was paying rent for a little condo in Conover, North Carolina, and just trying to scrape by on 25,000 a year. And I was basically making a Jaguar payment every month on my student loan debt. That's another piece of advice I think I give a lot of young people is determine what your highest interest rate debts are and pay those off first and just go backwards on interest rates, not necessarily on amounts. Because while I had $55,000 in school loan debt, it was actually one of my lowest interest rates because it was subsidized loans. I had credit card debt. I had another $30,000 in credit card debt. I like to say that I lived like a lawyer when I was a student. So I lived like a law student for the first 10 years I was practicing law. And during those first 10 years of practicing law, it's really tough. And I don't care what profession you're in. I think the first 10 years are tough. You're learning the first 20 years, you're earning the next 20 years, and you try to return the next 20 years is how I see life. You learn, you earn, and you return. But fortunately, focusing on paying off the highest interest rate credit cards first, throwing as much money at those as I could, eating as little as possible, doing as little as possible. It was tough
Yeah.
during those first 10 years. And I think that's tough for anybody. But getting rid of that debt first in those first 10 years, and I was able to pay off all my student loan debt. I paid off all my credit card debt in the first 10 years. And then after that, I could actually start building money after that. But yeah, that's probably my biggest piece of advice. Try to pay off your debt with the highest interest first and pay it down, and then you'll be able to move forward and then start saving for retirement.
And I think what people don't understand, young kids coming out or going into college, getting a student loan is, and then when they get out, that debt really limits their professional options. And what I mean by that is if you're 5 years out of college and you have a lot of debt and some great opportunity comes along, and I was a good example of this, I couldn't really take advantage of that opportunity because of my debt, right? As I got older and got my debt paid off, I realized just how freeing it was. Most opportunities don't come with big salaries, they come with equity. And so the only way someone can typically take advantage of those is if they have their debt under control, their expenses under control. Do you find that to be true?
Yeah, and I actually remember talking about that with another older lawyer early in my career. He said the great thing about practicing law, and I find this to be true, most lawyers do not get wealthy practicing law. They make a living,
Yeah, no, exactly.
and I believe this is really any business, not just practicing law. You're exposed to opportunities. I remember I was in my first year of practice, and the founder of the firm, he was probably in his late 70s, early mid 70s. He comes by my office one Saturday night. I'm in there working, 7, 8 o'clock at night on a Saturday night. And he comes by my office and he starts giving me financial advice. Now, this is a man who had practiced for 50 years, made a lot of money. But he's like, what you really need to get into, Joe, is you need to start buying car washes and laundromats and put everything on your credit card every month and then pay that credit card off every month. And I'm sitting there, that he could have been speaking Swahili to me.
No, right.
At 25,000 a year, I had no concept of what he was talking about. But and he had ended up making a lot of his money, not in the practice of law. He ended up making his money in people coming to him and presenting opportunities like car washes, laundromats, self-storage facilities. He got into somehow he fell into with a partner that they built the U.S. post offices for the U.S. Post Office all over the country. And the way the post office would work back then is they just rented from you. They gave you the specs of what they wanted. You
You
built the
built it.
building
Yes.
and you got a 99-year lease. So he was sitting back, he sat on, I think, 20 post offices around the country that he was getting half the rent off of every month. So listen to your elders because they will present opportunities to you. Unfortunately, when you're that young, if you are that in debt, you're just not going to have the money to execute on those opportunities. So the sooner you can free yourself from the shackles of that debt and get into those opportunities, that you will be better off sooner in your life. It'll definitely help you out.
I think of all the and I've done a couple dozen podcasts of all the things that I've kind of kicked this off with. If someone's listening to this, I think it's probably the most important takeaway of all the things over my 40-year investment career is opportunity is constant, but you can't take advantage of it if you're in debt, like you're talking about. And you can't even understand it because it's to your point. Someone will say, go do this or that. And you're just like, well, that just doesn't make any sense. That's not even a real opportunity, though it really is an opportunity, but you can't because you have car payments, you have house payments, you have student loan debt, you have et cetera. So getting out of debt and living within your means is you just almost can't highlight it enough because that's why people who have a lot of money, and you and I work around a lot of people that have a lot of money. It's basically our careers. That's the one common denominator across almost all of them is they almost have no debt. And
Yeah.
it's fascinating how few toys they have. I mean, people
Mhm.
that have a lot of money, they have a few toys, but not many. And then they're just kind of what their hobby is almost doing what your old law partner was, right? Their hobby is
Yeah.
almost investing in, oh, what about this? What about that? I'll go meet this person, right?
Yeah, yeah, and I think that also it shows how wealth begets wealth. If you are what I call lucky sperm, you were just born into a family that had lots of money, you're probably going to start out life not with a lot of debt, and you're already going to have a lot of contact with people who have those opportunities available to you. So the next generation can keep going. But it's been my experience that most people who are the first generation of wealth in their family, which I am, in my family. Our family, we worked our way up each generation. Fortunately, we got a little bit better off each generation. But uh, my family was not wealthy. And talking about the toys, yeah, I always laugh. I go, you're really, really, really rich when you've got a yacht, a horse, and a private jet. That's rich.
That's the ultimate,
Uh,
right?
that's the ultimate. But I look back at my uncle. My uncle was the first generation in his family. He started his own business. It's a precision tooling company up in Virginia. He hated debt, but by keeping the debt off of his business, he never borrowed money ever. I don't even know if the man ever had a credit card, other than to, buy things that he could only buy with a credit card. But one of the things that having that no debt helps you with those opportunities is typically when there's a downturn, when there's a recession, a lot of people who don't have money tend to, fall even deeper into the recession than people who do. But my uncle would use that recession. He loved recessions because the recessions meant that he could go out and all of his competitors who had gone crazy during the good times spent all their money and gone deep, deep in debt to buy tons and tons of new equipment. He would just sort of, he knew during the good times, he's like, okay, keep it easy, keep it slow. We grow
Exactly.
steady.
That's
Now
right.
the bad times are here. All my competitors have gone bankrupt. I'm going to go in and buy all this basically brand new equipment at auction, at bankruptcy auctions. And so he got just amazing equipment at rock bottom prices. So then when things got better again, and he stayed in business through the recession. So what business there was, his competitors were gone and he had
He
business.
grew. Yeah.
Yeah. So he grew during the recessions. And then when times got really good again, he's still there. He's still, doing a great job for his customers. He's not going deep in debt. He's not going crazy. He's not hiring like crazy. He's not buying tons of equipment. And then when the times got bad again, he said, okay, I saved my nuts up for the rainy day. Let's go out and buy more great equipment, replacement equipment, and be able to do even bigger jobs each time. And so that's how you also can open up opportunities for yourself, but you cannot do that if you're shackled with debt.
That's right. And really the reason I started this podcast, so I was in corporate, so I worked at Schwab and Ameriprise, all the Fortune 500 financial service firms my first 30 years. But in 2012, when I started Core Wealth, I said, I really need to come up with some principles that help clients and prospective clients kind of really get their arms around what it is that people with money do and what it is that people without money don't do. And I came up with Have a Plan, Be Diversified, Seek Counsel. And one of the things that I still find fascinating, and the reason that I started this podcast is really what you just talked about, because what most people that don't have money, because I'm the same, I grew up with no money, but I was very fortunate to run into people and work with people who had money. And I realized that people who have money, they don't act the same. They ask different questions, they think differently. But if you're just like a young 30, 40-year-old person working and you're just looking at a neighborhood, that neighborhood all looks the same. But in reality, they're not the same, right? I mean, they have different debt. They make different financial decisions. And I'll leave it with, I'll kind of hit off with one last thing. And I really need to find the name of this podcast. But one of the podcasts I listen to is a founders podcast, and they interview these young tech, I call them kids, but they're 30, 35, 40 years old. And they look for common traits within those investors or kids, that do these startup companies. And someone without money would think that someone that goes and makes $5 or $10 million immediately they'd go buy a Ferrari, get a jet, etc. And what this podcast found, interviewing actual really founders, individual founders, is that they still lived very modest lives. I mean, net worths of $10 million, they still flew regular coach airlines, right? And this guy would interview him and say, well, when do you think you can fly? I mean, you have $10 million. When can you fly get your own jet? And he says, that almost university, the number's like 50 million. Right. Well, no one has 50 million, right? So these people, they just don't think like normal people when it comes to investing and building. They just think in terms of, how do they add more value to clients, I think is kind of where their brains are.
That, and it's been my personal experience. Every time I've had a liquidity event, whenever I've sold a company, uh, I I drive everybody around me crazy because they're like, "Oh, good, you can retire now." I go, I mean, I'm only 54 now, and I go, "Why would I retire? I I want to grow another business. Let's start another business and grow it.
Right.
And it's really you've got this challenge mindset, and you're not. And I've heard this from a lot of sports athletes, the goats out there. They don't see it as competing against anyone else. They're competing against themselves at that point. And that's the way I really feel myself. I don't try to compete so much against my competitors
Right.
in the legal field. I'm competing against myself. And for instance, I was talking to my managing lawyer yesterday, and she said, "Have you ever thought of going and getting your board certification in real estate law?" And I said, "I did. I actually did. About 20 years ago, I considered it." And I had a great business coach back then who said, "Okay, is that going to get you more clients? Is that going to make you more money? Is that going to get you more time off? Is that going to make your life more balanced?" And I said, "Well, no, no." They said, "So it's really just something to hang on your wall and make you feel better." And I told her, I said, Most board certified real estate lawyers I know are scraping by. They're wonderful lawyers, absolutely know their stuff,
Yeah.
bar none. Wonderful, wonderful lawyers. But when it comes to the business side of running a practice and growing a practice and scaling a business, they're not there. And I see that in all kinds of industries where
Doctors for
people,
sure. I mean,
doctors,
attorneys and
yes,
lawyers. Oh my
yes,
gosh. I mean,
yes,
to your point,
yes.
it's very common. They're extremely bright, high IQs, learn fast, but boy, when it comes to basic business and investing, they really struggle.
Yeah, they have no clue what to do. Well, and
Yeah.
we don't learn that in law school or med school or dental school. It's not taught to you. Uh, I mean, I did. I took a law office management class, but I learned very quickly there's a big difference between how you organize your file cabinets versus who you're gonna your culture that you're gonna build and who you're gonna hire, fire, and promote to that culture, and how you're gonna structure your business for scalability as you grow.
Yeah, that's a really good point. So let's get into so I don't run out of time. I want to talk a little bit about your business. And I know you primarily focus on these people starting businesses from an LLC, a land trust. Let's start with the land trust. But before I get there, I just want to point out to everyone on the call, one of the things that I really, really like about Inspire Legal is you give packages. So it's very transparent what someone's going to get when they call. So when you build your business, it goes to what we were just talking about. It's extremely focused on the client, on what you need, and then you know what you're paying for, and then what is exactly you're getting out of this. And I find that is just such a unique offering. I love how transparent you guys are.
Yeah, that has come to me over the years, and that really came from a book called Persuasion. And I read it in one of my coaching groups that I was in years ago. And persuasion talks about how it's not persuading someone, it's persuading them. It's before they ever even realize what's going on. So Starbucks does this with small, medium, large, whatever they call those. And you always want your medium to be your most profitable item. So we came up with a lot of pricing contexts, and any good business does this. And you have pricing context because the biggest complaint that a lot of lawyers get, in addition to "you never call me back, you don't respond to my emails," the next biggest complaint is, "I don't know how much this is going to cost. And I want to know how much it's going to cost." So we basically offer a lot of our services because we know how much it's going to cost us to do it. We know how much time and effort, 9 times out of 10, we're going to put into it. So 9 times out of 10, we make money. There's that 1% that we don't, but that's okay in the long run. We still break even on those at least. But we learned that if you can offer a small, medium, and large offering in a lot of different services that you have, people will do that. And little secret, 9 times out of 10, they go for the middle one because the cheap one is, well, they don't want to look cheap. And also it really doesn't cover everything they're going to need. The super grande looks like, yeah, that's stupid. Why would I spend that kind of money? So the middle is, yeah, that works. And actually, the middle price is usually double what we were charging before we introduced the pricing context. So pricing context is very important for any kind of business. And I've just grafted that into the practice of law. And then you package things because most people, like for us, they want an LLC. That LLC is either going to be complicated or it's going to be simple. So we have two different prices for those. They need loan documents. They can be simple or they can be complicated. We've got closing services where we're representing the buyer or the seller or the lender in a transaction, commercial or residential. We've got small, medium, and large of the services that we provide in that and different price points for that. Deeding, whether you want this or you want that or you don't want this, you can cobble it together and you get one price. And it's taken care of. You know upfront what you are going to pay for whatever you're getting. And I was talking to a lady one time and she said, I just went and had my estate plan done. And the lawyer has yet to tell us how much it's going to cost. And she said, I'm freaking out because she's done all this work. We've had two meetings with her. We're going to have another meeting where we go over everything and sign everything. She's done tons of documents. She sent us at least 3 inches thick of documents to review already. And I said, how much do you think it's going to cost? And she gives me this just crazy amount that she thinks it's going to cost because it's got the
Right.
thud factor. It's a lot of documents.
Yeah.
And later I talked to her. She finally got through the estate plan. I talked to her. I said, so what did it end up being? She said it was $2,500. So now she's questioning, she's like, so did she really do a good job for me? Because that's not right. So I also learned early on that if I don't have a package for something, I ask the person, I'll tell them, okay, we're going to do this, we're going to do that. And they go, okay, how much is it going to cost? And I've learned now, I don't throw out a price. I go, how much is that worth to you? What do you think it will be? Now, I'm not doing that because I want to charge them more than whatever they're going to say. I do that because I already had the price in my mind, what I'm going to do about what it's going to be. But I learned that a long time ago from another lawyer as well. He said, ask them up front what they think. And I can tell you right now, 9 times out of 10, they're going to come back with a value that's much higher than anything you could ever imagine as the attorney. And so I always do that. And then 9 times out of 10, yeah, I'm usually thousands of dollars less. And then, but then I can handle that question up front. They ask me, well, how in the world, what are you talking about? That, are you really going to do anything? And I explain how we can do it cheaper. We've got automation. We've done this for 25 years. We've got this, we've got that. It's a process. I've got people, legal assistants rather than lawyers doing this work. The lawyer has to be involved very little because we've automated so much of it because we have done this so many times. We have it down and we have the software and the procedures in place to do it. So, but that's a good, point. And it's not just in legal, it's in any business. If you're a house painter, if you put up awnings on houses, if you do air conditioning work, you can always ask the person, what do you think it's worth? What do you think it's going to cost you to
Right.
do this?
That's good.
And they're going to throw out this huge number. So when you come in with your price, and you may still up your price a little bit because you're like, well, if they thought it was going to be this much, I'm still going to up my price a little bit, but you're going to make more money. They're still going to be happy, and they're happy because they knew up front what it's going to cost. That
Eh,
not a surprise.
So on the three principles that I really push, wrote a book on. I mean, I've spent the last 10 years really hyper focusing on have a plan, be diversified, seek counsel. But a lot of times those don't mean what people naturally think. So on the seek counsel piece, what people don't realize is when I say seek counsel and I get feedback periodically where they'll say, well, don't use the words, I don't like seek counsel. I'm like, whatever, call it whatever you want. It means input. But successful people that I know, they will get multiple sources of input. And the bigger the financial decision, the more input they get from multiple people. But one of the pieces that they'll do is when they go to the professional that's going to charge them. So I'm not going to go into detail on it, but basically there's two kinds of counsel. There's formal counsel and informal counsel. So the informal counsel is just ChatGPT, internet, your neighbor, etc. But it's all free, but there's no accountability to the person giving it, right? Once you get to the formal counsel, people who have a lot of money and have built wealth, they understand the difference. Whether they can verbalize it or not is a different discussion. But they know when they're sitting down with an attorney, a financial advisor, a CPA, someone that's going to charge you money, that interaction is going to be a little bit different. And one of the things that I just wanted to hit on was the price part is so important because it calms them down in the sense of this is going to cost me this. And one last thing that I find just incredibly fascinating as I interview and talk to and interact with people who have an enormous amount of money. They don't look necessarily at the cost of something always. They want to know the cost. Okay. So it's going to cost me $5,000 to put a will. Okay. But the other thing that they look at, and this comes right from Charlie Munger, is someone asked him at a Berkshire Hathaway meeting one time where they said, what's the best financial advice or investment advice that you've ever gotten. And his answer with no pause was invert everything. Okay. And what he meant by that was he was a weatherman. So when he was a weatherman in the army, he was helping these pilots go out into their missions. And he said, if I gave them good information like sunny skies, clear winds, etc., that was helpful to some degree. But where I really added value was when I gave them the worst case scenario, the hey, by the way, there's hail, there's snow, etc. And my point is when people sit down with an attorney that's successful, they don't say it's going to cost me $5 grand to get a will. They'll say it's going to cost me $5 grand to get a will, but if I don't get a will, what will it cost me? Oh my gosh, that could be $50,000, right?
Hmm.
And now they can go into this, lower all the anxieties, and just go forward and write the check for 5,000, knowing that the other side could be 50. And I'm
Yeah,
probably
and
not exaggerating on the 50.
oh yeah, no. And I was talking with, I mean, reading, you read Rich Dad Poor Dad, Kiyosaki. He always talks about you pay your brokers, your lawyers, your CPAs, your financial advisors. You pay those people, but don't gripe about it because what you're paying them should be returning you, a lot more than anything you would ever pay them. And some of my best, I mean, I've had some great clients as business owners, and one I remember you always want to surround yourself with people who are smarter than you. And
That's
there's
right.
two ways to do that, two quick ways to do that. One is you join a coaching program, a mastermind, something, and you're going to see a roundtable, whatever, and you're going to surround yourself with people who should be as smart or smarter than you, who will give you input. And that's part of that informal input you have. But some of my most successful business clients who have had huge liquidity events when they've sold their companies, they have created their own board of advisors for their companies, and they will call them in quarterly, and they will sit down with these people, and they are people that they respect. They're lawyers and CPAs and other business people from other businesses, and they will sit down and they will talk about for 2 or 3 hours the business of my client, and they will talk about, hey, what have you done, what are you doing, what are your plans, what are some ideas, and they will help them flesh out even more ideas. So my clients who have done the best, after they get to a certain size, they form these advisory boards internally. And I've been asked to be on some of those boards now and then, and it's fun
Do they
because
pay
you get to,
you? Do they
no,
typically have a fee? No, it's just
it's
that's
it's
a
it's all
test.
volunteer. It's paying it forward. The way I look at it, you're
That is
you're
such
going
an
in and you're
awesome
helping
idea.
somebody else get better. Yeah, yeah.
Right.
You're just helping somebody get better at their business and have a better life because that's our core mission as a firm is to help people aspire to a better life. So to me, that's just part of fulfilling that mission, a small part of it.
And that is when I talk about seek counsel, that's the essence of seek counsel, right? I mean, that's the high end where all of a sudden you have 5, 6, 7 people, you're trying to make a financial decision. They're giving you totally unbiased, unemotional, here's what I think. It doesn't mean you have to follow their advice.
Right.
It just means now you have a clearer picture of best case, worst case, and even the likely case, right? So now all of a sudden you're making an investment that's with a lot more confidence and a little more clearer about, what you're doing and why you're doing it. So
Right.
so let's talk about I can't tell you how much I've enjoyed this first kind of 30 minutes, but I want to kind of hit on the legal part of it. What about these land trusts? So let's get into the whole real estate conversation because what I find with people who've accumulated a decent amount of wealth, it's in fact, this is really fascinating to me. So I'll be curious to see if you find the same thing true. I find people who are invested in the market don't do much real estate, and people who do real estate aren't much in the market. I mean, like I do markets, obviously, I'm a financial advisor. When I talk to people with real estate, they'll have no money in the market. They'll have it all in real estate. Do you
Yeah.
find that to be true?
Unfortunately, I do. Yes. And I'm always telling people, you've got, and it's in real estate as either they are lending money or they just own and hold or they're flipping. They are in real estate
Yeah, no,
in
exactly.
some
Could be
form or
any
fashion.
part of the real estate segment.
Right. Right. And I'm always, it's like, guys, you really need to diversify a little bit. But for whatever reason, it's just a mindset. And it's been my experience that it's a lot of people who they either grew up in real estate, so that's what they're comfortable with, or they didn't grow up wealthy and from a family with a lot of holdings. and they just feel comfortable with real estate because they can see it, touch it, feel it, go to it, visit it. And they have some active involvement in making sure the roof is not leaking, making sure the air conditioners are working, things like that, making sure tenants are happy, whatever they're doing with it. It's a mindset. I'm I'm probably sort of an odd bird because I am 50-50, but as much as I work with real estate, I have pulled out of all I don't do any residential leasing anymore at all. I don't deal with residential tenants. We only have, and really even commercial, I'm down to just two office buildings is all I have left. I have two office buildings and I have two houses that I live in. That's it. We do have some other real estate that we've sort of taken back over the years because we got into mortgages. We did mortgages for a while, for hard money lending. But it's one of those things you can see and feel, and you feel like you're actively in control. Whereas with the market, I feel like, and I'm heavily in the market, I feel like I turn my money over to someone else like you and say, here, go make money with it.
Right.
And it's much, much more passive. And it's really that mindset, whether you got that more active mindset and you got to touch it, feel it, or you want to just say, just go deal with it. I don't want to have to think about this day in, day out. I just
But
want to make money.
But even to go one step deeper, it is active versus passive. But on the passive side, I find that the people who have, and this is why I encourage people to at least put $10,000, put $5,000, put money in the market so you get used to the up and down. Because the one thing about real estate, and I've had lots of these conversations with clients, is your real estate goes up and down on a weekly, monthly basis. Okay. At any point in time you want to sell that piece of property, trust me, there's a 10, 15, 20% swing just how fast you want to get out, but you don't see it,
Right.
right? And in the investment world, you literally see it in a monthly statement every month, and you can go on and see what your stocks are doing. And that takes time to learn. I mean, that goes to your point. That's the second part of that takes time to learn. You kind of got to take your investments. It's the same in real estate. It has the same swings, interesting enough. It's just not as visible.
And it's not, and real estate, the thing I've found about real estate, it's not as liquid. You're susceptible to interest rate swings, but now we know a pandemic can come along. I mean, I own office buildings. Who would have ever thunk that, hey, nobody
Correct.
needs offices anymore. Nobody
And
wants
now they're
offices
back to
anymore.
wanting them.
And now they're back to wanting them. But in the meantime, you're still holding that thing. You
Correct.
couldn't, it's not like some stock that was tanking, then you're like, okay, dump it, move on.
Right.
It's okay, now I'm sitting in this 7,500 square foot office building, only 50% occupied, and I'm still having to pay the whole power bill, the whole
Yes.
roof, everything to keep it, insurance, everything else. So I try to personally, we're much more balanced now. We're probably about 50% real estate, 50% market. And in the market, we're balanced. But I can tell you horror stories about clients who, before the last recession, had put their entire retirement savings. They used self-directed IRAs. They rolled their 401ks after retirement into self-directed IRAs. They lent all the money out on second mortgages. The real estate market crashed and all the first mortgages foreclosed and they were wiped out. They had nothing. They had no collateral. And then the borrowers either just disappeared. We literally had borrowers who just disappeared into the ether. We have no idea where they are to this day. And others who declared bankruptcy and said, sorry, too bad, I'm bankrupt. In fact, during the Great Recession, we did bankruptcy. And it was so funny because my partner and I, we go out to lunch, we'd come back, we'd pull into the parking lot, there'd be a Maserati, there would be a Lamborghini, there'd be a Ferrari, there'd be a Rolls, there'd be a massive Mercedes parked in our parking lot. And he'd go, what is that? Who is that? And I go, oh, it's another real estate investor or another real estate broker here to declare bankruptcy. They're coming in to declare bankruptcy. And I'm sure they won't have that car much longer, but it was tough. So, sometimes the market, it's nice to be balanced. And I'm always preaching that to my clients. I mean, I'm sure you hear it too, the pushback. No, I do real estate. I want
Yeah.
real estate. And I go, okay, I've told you, it's all I can
They
do.
got to do investments in the stock market. Younger is better. I have a client who got a big settlement, and I know him really well, and he knows the attorney that got the big settlement really well. And what I tried to explain to him, I said, you have to understand, we're giving you like our life advice, But we started off with no money, and our $10,000 then turned into $5,000, and then our 20,000 turned into 15,000, and then our 50,000 turned in. And next thing you know, you're losing the value of a car on a weekly basis, or making the value of a car. I said, that sounds crazy, but that takes time. And you have to really become an investor. And those are two different kinds of investments, though. I will say, over my investment career, I have seen more fortunes lost in real estate than in stocks
Yes,
ever. I mean, because
absolutely.
because real estate has carrying costs, and no one thinks about that, right? So if I go buy IBM and IBM goes down 30 or 40 fold, as long as it's a good, not 30 or 40, it goes down 50 or 60%. As long as it's a still good company and they change the CEO, and there's a pretty good chance that one will come back, right? But I can hold on to it for nothing, right? It doesn't cost me anything to. If I own a piece of real estate that costs me 5 grand a month, I may not be able to hold on to that.
Yeah. And Gunderson talks about this in his books. He talks about any investment is going to make money depending on how long you can hold it. I mean, if you can hold an investment
Absolutely, it's a
for
time,
100, if you can hold it for 150 years, yeah, you're going to do fine.
right?
It's just, but if you're holding that real estate for 27 years or 30 years, it does have a lot more cost to it. Now you can depreciate those, and you can expense those, but you hope that you have other income that to take it against, other passive income you can take those losses against. And I had a friend, he hit it big in the stock market, did very well. All of a sudden, I had worked a W-2 job for 30 years and made 8 figures in one day off of selling a stock. And so he was talking about that one day. He said, "Yeah, I know real estate, but," he said, "there's something about when I need $100,000 to do something I want to do, and I just go, okay, fine, sell this. I'll take the 100,000 out. I can do it rather than it's tied up in an office building or a duplex or whatever, and I'm having to deal with tenants."
Yeah,
And this is also for generational wealth. This is one of the biggest issues that I have with a lot of my clients who are very heavy in real estate. I mean, they own 37, 100 homes, whatever, rentals. And I go, okay, so now you're going to, how we're going to pass these to the kids. A lot of them go, my kids have been involved in this my entire life. They want nothing to do with real estate. They've seen me have to get up in the middle of a Saturday night and go unclog a toilet, clear a sewer line, put tarp on a roof that's leaking in a thunderstorm. They want nothing to do with real estate. I go, so what are you going to do? They're like, well, we're going to start selling everything off, converting it to cash, putting it in the market. We'll pass cash on to them. They're going to go on and just have regular plain W-2 jobs for their lives. That's what they want to do. So even generationally, it can pose some problems if you're extremely, extremely heavy in real estate. It can cause problems.
yeah. What I find, have a really good friend who's, again, really successful. So remember, about 80% of people who have $1 million net worth, they do it in their generation. People, especially people without money, they think people inherit money, but actually the majority of people that have money made it in their lifetime. And what I find, as someone who's worked with both kind of groups, trust babies and not, is those of us who made the money, we think what we know is what's important to our children. So we try to teach our children what we know. Okay. And I was trying to explain this to one of my friends. I said, what we know is irrelevant. But again, the person's accumulated $2, $3, $4 million in net worth. They're super type A. Everything they know seems to be really of value. And it is for them individually. It's not for our children. If you look at a trust baby, a kid who grew up with money, especially by the time you get to third generation, third, fourth, fifth generation, what that group teaches their children is how to hire and fire. And
Mhm.
they start at a really young age. I'm talking like the lawn mowing business, the cleaning business, and because they don't really know anything. If you're a trust, I'm not
Right.
taking anything away from them, but they don't have that ego tied in to where they think, because I know investments, I want to teach everything I know to my kids about investments. They don't know anything. So what they do know, though, is how to hire an attorney like yourself, right? They know when they sit down with someone who's giving them BS. They know how to make sure that they're not getting ripped off. And I think of all the things that we can teach our kids as first generational wealth is the hire and fire, and kind of step aside, leave our egos out of it, because what we know our kids don't care about.
Yeah. Well, and myself, I know, I mean, a lot of people, even when you have a professional, you may have two or three of the same. I hire lawyers to represent me. And I always have at least, right? I've got a issue going on right now. I've probably got 5 or 6 lawyers involved in 2 different states on this issue. And we all work together to get the best answer. I've always got at least 3 CPAs in my life. One that does the books every day, one that does just tax consulting, and one that actually does the returns. You've got different people around you that are sort of checks and balances on each other, but not just checks and balances, but also trying to get the best answer out of it. And once you get to a certain point, you're fortunate if you can afford to do that. But in the long run, that should help you hold on to what you've got, of course, but also make more money and become more wealthy and more have a better life
That's
as time
right.
goes on because you've
And,
just got more people.
and the best answer, people have to understand, and again, I'm talking to people who are listening to this that are not necessarily where they want to be yet because, but they're aspiring to be there is in anything you do from an investment perspective, even from a career perspective, it's not yes or no, white and black. It's always gray, and there's always this huge amount of what I would define as art versus science that
Mm.
plays into it, and you just have to get used to that, right? It's not like the best answer is the best answer today, but if it's the wrong answer, you just adjust next week and or next month or next year and move on. You can't
Right.
hyper focus on looking for the
Right.
best answer. I mean,
Yeah. Yeah. And I've had bad advice. I've had good advice. I've had great advice. And this is the thing too. I
oh
know
my gosh.
we're talking to young people here, but one of the things I did a few years ago was I stopped giving advice to anyone under 30 on what they should do because I remember now when I was under 30, I was always smarter than the generation before me and wiser than the generation behind me. And anybody's like that. You're always smarter than the one before and wiser than the one behind you. But it's been my experience that I had given advice to teenagers and 20 somethings for years. They never took it, they never listened to it. So I was really just wasting my energy. Once you hit 30 and you've been knocked down a few times through your 20s, once you're in your 30s, you start listening a little bit to the people who are older.
Yep.
Once you're in your 40s, you start seeking it out. You start going to older people with more experience, going, "Oh, hey, this is what I'm thinking about doing. What do you think? Have you seen this before?" And once you're in your 50s, you hope you're starting to give advice back that's actually listened to and taken. But unfortunately, it's just been my experience that a lot of 20 somethings and younger I can talk till I'm blue in the face. I can tell them based on my experience, based on my education, what they should be doing and what would probably be the best course of action to keep as many options open as possible and open as many doors and opportunities for them as possible. They will not take it. In your 20s, you want a quick hit, you want to get it and move on. You're smarter than me. So, why do you need this advice from this old guy? Nothing works today like it worked 10, 20 years ago. Why would I listen to you? So, there are eternal verities, though, that we can share with you as a younger person that will always be truthful in any generation, in any time. And the more I learn about history as I get older, the more I understand that everything we're going through today has already happened multiple times over generations in different, it just looked a little bit different because the technology was different. Maybe the TV was black and white instead of color. But, it's all happened before.
And the
It's just,
emotions that went with it were
yes,
all there, right? That's the key part of
yes,
it. And you hit
yes.
on exactly what I've written multiple articles and talked to people about. And I'm a massive Charlie Munger fan, though I like Warren Buffett, but Munger's like my favorite kind of investor. And one of the things that he was asked in an interview was about advice. And he tells a whole long story about when him and Warren were on the Smith Barney board. Anyways, what he kind of summarized was advice he gives is unless the person's almost there, it adds no value, right? And what he means by that is it goes to exactly your point. If I'm talking to a 30-year-old, if they're not almost there, anything I say almost makes no difference. And that's why most people, when they're just getting general advice and they go make a great investment decision, if you ask them where they got that advice, they almost can never tell you, not because they don't want to give that person the credit, it's because they literally don't know, right? Because they asked 10 or 12 people and then they took some variation of those data points and they were almost there to Charlie Munger's point, right? And then that was enough to say, okay, that all of a sudden someone says something, I'm going to go do it. And investing in real estate or the markets is almost identical. It's just one's real visible and you can see yes or no, and the other's a little longer term, but the basic concepts are similar.
Yeah, and that sort of takes me back, the law partner telling me, "Hey, buy post offices, build U.S. post offices. I'm making 25,000 a year." Yes. At the time, I'm like, "Okay, you crazy old man, get out of my office. I've got work to do." But I still remembered it
No,
at
and that
least. And
helped you with a
yeah.
lot of investments
Yes.
down the road,
And
right?
as I got older, to this day, I put
Yes.
everything I possibly can on the credit cards, and I pay the credit cards off every month. No matter how much it is, I pay the credit cards off every month. And so that stuck with me. And also, hey, yeah, just be open to opportunities that may come across. For me, it was people needed to borrow money. And so for a while, I did hard money lending for some folks. I did well with it. With the interest rates, the flash crash in 2022 and everything else coming down the pike, I pulled out of that market last year. But you look for opportunities, be awake to them, and take them when you
Yeah.
can, however you can. You try to take those as you can.
And be prepared for them. So to
Yeah.
finish up, how do they get a hold of you? We didn't get into the whole legal conversation, and I do these conversations kind of on purpose because I just let them naturally open up. So I can't tell you how
Yeah.
much I appreciate you taking the time, Joe. Why don't will you give a summary of kind of how they get a hold of you and
Yeah, yeah. There's two ways to get to me. The one way is you go to joeseagle.com, joeseagle.com. That's my personal brand website. You can always and you can get to everything I have from there. Or if you're specifically looking for legal, you can come to aspirelegal.com. And like you said, we have a really good, robust website there that tells a lot about us. We've got tons of blogs. It's got links to our channels on YouTube and our blog articles. I put out a newsletter every Friday at 8:15. Most Fridays. I think I take 2 or 3 weeks a year off. And that we discuss the latest that's going on in real estate that may affect you legally, market wise, whatever. And then I also talk about, I always do another card that talks about sort of a legal aspect to think about. And then the last card in my newsletter, I always talk about something coaching for your business. The biggest issue I always had with when people were starting up their businesses, I was getting them set up legally. We were doing fine. And get them set up perfectly, and then it falls apart in a year or two because they didn't really know about, well, what are the dynamics of hiring and firing? What are the dynamics of working with a partner? Just get through life and grow. So that last card's always in my newsletter is always dedicated to a coaching moment there. Also, we have mylandtrustee.com. That's our website for our land trust company. In the land trust company, we will act as an independent professional third-party trustee. We are the largest and oldest one in the state of Florida. We've been around, well, in previous iterations, we've been around since the late 80s, late 90s. I really got into it in 2004, 2002, 2004. And we hold over 2,000 properties around the state of Florida in trust. We hold hundreds of mortgages in trust for some lenders who don't want their names out there. But basically, what we do is we make you look poor. If you are heavily invested in real estate, that's one place where your name will appear everywhere, even if you hold it in an LLC, your name is going to appear. And if you hold it in an LLC that's one of the anonymity states like Wyoming or Nevada, that could be a problem because anybody can walk into a title company or a bank and say, "Hey, I own this property and this is my LLC and I want to borrow money against her. I want to sell it." And your property's sold out from under you. It's mortgaged out from under you. So if you use a third party trustee through a land trust, you get anonymity, but it also protects, it's sort of like title lock. It protects it from being stolen because people will have to come to the trustee to get a deed
will
or to
people
get a
do that with
mortgage.
their private homes? Would people do that with their private residence? Is that mostly an investment thing?
It's mostly an investment, but we
That's
do have
okay.
people who will because it's like, okay, I'll look poor everywhere because I showed that I don't own, the 44 mobile home parks around Florida are not in my name. Those mobile home parks are in this, but I have a $5 million house on a lake or on the beach, and that's my homestead. And anybody looking up my name can see that I own that. Well, I own it free and clear, and I don't want people seeing that I own it. Fine, put it in a land trust. You'll still get all your homestead protection. We'll make sure that you still get your homestead exemptions and everything. We'll be your trustee, so our name appears on that. So anyone looking your name up to see what you own when you're in that car wreck or you're in that big contract dispute or whatever comes up, that bet the company litigation, they're going to look you up and go, well, is it worth even suing this person? Because there's no fee shifting going on that we can get our attorney's fees out of it. So we have to hope that he has enough money when we sue him that we're number one, we're going to be able to collect a judgment. They are collectible, and they're going to be able to pay our attorney's fees. So they're going to run a little asset search on you. One of those is looking to see what real estate you own. And your name's not going to appear on anything. So you look broke. So they go, just
Forget
don't
it.
even bother suing them. We're not even
That's
going to sue him.
huge. That's a
Yeah,
great way to finish it. And so how we started and how we finished, we're almost identical. Is in order to build wealth, it's important to think in terms of getting yourself in a position to take advantage of opportunities. And to take advantage of opportunities, you have to have your personal life somewhat under control with minimal drama, because those opportunities do carry risk with them, but you can't take that risk if you have huge amounts of debt.
exactly.
So, well, thanks so much. I really appreciate the hour. It's been fantastic. It's been a really good conversation. I appreciate you, Joe. Thank you very
Well,
much.
thanks for having me, Tim. It's been
So,
it's been a pleasure.
thank you.